What if you could build a portfolio today and not have to worry about picking stocks, timing the market, or constantly checking financial news? Imagine investing in just a few ETFs and letting them work for the next 10, 20, or even 30 years. Sounds too simple? Well, history shows that simple often beats complicated. Today we're looking at 3 Vanguard ETFs that many long-term investors use to build wealth over decades. And the third ETF might be the most powerful diversification tool of them all. But before we get into the ETFs, let's talk about the mistake that keeps most investors from building real wealth. One of the biggest mistakes beginners make is chasing the next hot stock. Last year it was one company, this year it's another. And every year, millions of investors convince themselves they found the next big winner. The problem? Most winners eventually become losers, and predicting them consistently is incredibly difficult. That's why many successful investors choose ETFs instead. Because instead of betting on one company, you buy hundreds or even thousands of companies at once. And that changes everything. Let's start with ETF number 1, VOO, the Vanguard S&P 500 ETF. This is probably the most popular Vanguard ETF on the planet, and for good reason. VOO tracks the S&P 500, which includes 500 of the largest companies in the United States. We're talking about companies like Apple, Microsoft, Amazon, and hundreds more. When those businesses grow, VOO grows, and that's exactly why investors love it. With a single investment, you instantly own pieces of some of America's strongest companies. No research, no stock picking, no trying to guess who wins next year. Historically, the S&P 500 has been one of the most effective wealth-building tools available to ordinary investors. So if you want a simple buy and hold forever ETF, VOO is often where investors start. Now let's move to ETF number 2, and this one is built for investors who want a little more speed. Meet VUG, the Vanguard Growth ETF. If VOO is a balanced athlete, VUG is the sprinter. This ETF focuses on companies expected to grow faster than the overall market, which means you'll find more technology and innovation-focused businesses inside the portfolio. And historically, many of these companies have driven a huge portion of market growth. But there's a trade-off. Higher growth potential usually comes with higher volatility, which means bigger gains during strong markets, and sometimes bigger declines during tough markets. So if you're younger, have a long time horizon, and can handle market swings, VUG can be a powerful addition to a growth-focused portfolio. But now we get to ETF number 3, and honestly, this might be the most underrated ETF on this list, VT, the Vanguard Total World Stock ETF. What if you didn't want to bet everything on America? What if you wanted exposure to the entire world? That's exactly what VT does. Instead of investing only in US companies, VT invests in thousands of businesses across dozens of countries, developed markets, emerging markets, global industries, global opportunities. With one ETF, you own a slice of the world economy. And here's why that matters. Nobody knows which country will produce the biggest winners over the next 20 years. It might be America. It might not. VT removes the guesswork. You're not betting on one nation. You're investing in global economic growth itself. So how would I choose between these 3 ETFs? If you want maximum simplicity, VT is hard to beat. If you strongly believe in American businesses and the long-term strength of the US economy, VOO makes a lot of sense. And if your goal is maximizing growth potential, and you can handle more volatility, VUG deserves a serious look. None of these ETFs are perfect, because there is no perfect ETF. There's only the ETF that matches your goals, your risk tolerance, and your investing style. And here's the truth most people eventually discover. Long-term investing doesn't need to be complicated. Many investors spend years searching for the perfect stock. Meanwhile, some of the wealthiest portfolios are built by consistently investing in broad market ETFs and holding them for decades. The key isn't finding the next winner. It's owning great businesses, staying invested, and giving compounding enough time to work its magic. So if you could only choose one of these Vanguard ETFs for the next 20 years, which one would it be? VOO, VUG, or VT? Let me know in the comments below. And if you enjoyed this video, subscribe, because I'm breaking down ETFs, investing strategies, passive income, and long-term wealth building in the simplest way possible.